Hey everyone, today is March 24th and today the market closed down just a little bit. The Dow down 3 points, S&P down 21 points, and the Nasdaq closed down a lot, down 265 points or just over 2%. So what happened today, and is the market going to continue down, or are we going to have a chance to push up higher? Before we continue this video, please read this disclaimer. You can pause this video as you read it. Okay, so what's happening in the market right now? I think the market is still a bit spooked by the rise or potential rise in interest rates and the rise in yields. The dollar has been moving up a lot lately, and we talked about this in previous videos, how we seem to be following a certain pattern in the dollar that we had in 2018. And if this thing continues to follow the same pattern, we will see a big spike this year, and that's going to put a lot of pressure on stocks. And also, we're seeing yields move up quite significantly over the last few months, really since August of last year. And that's also putting a lot of pressure on stocks, specifically tech stocks, right? We've seen a lot more strength in the value stocks, which is why we've seen the Dow hold up a lot better than, say, the Nasdaq over the last few weeks, which is the Nasdaq's been coming down a little bit. And that's really just people they're a bit worried that interest rates are going to go up a lot higher, and that's really pushing the rotation from tech stocks into value stocks. But the question is this something to worry about in terms of the longer term view of the market, right? If you're a longer term investor, I think that if you look at the stock market in the daily and weekly time frame, you'll see that really what we're seeing right now isn't really anything, in my opinion, to be too worried about, right? Because if you look at the past, we've had times where the interest rates and the stock market have been high and have been doing well. They can coexist together, right? And a good example is in the 90s, right? The stock market was booming and the interest rates were relatively high, especially compared to now. But the problem is that we've been in an environment and over the last decade where we've had like really unusually, almost artificially low interest rates, such so that now that interest rates are really just starting to rise and go back to historically normal levels, I think the market is having some sort of like kind of withdrawal effects, sort of like somebody who's like addicted to like certain substances and they're trying to get off the drug. They're going to go through withdrawal phases, right? And I think that's exactly what we're seeing. We're seeing little shocks in the market, pushing the price of stocks down as we continue to get used to a new environment where interest rates can go higher and coexist with rising stock prices, right? And so that's one of the reasons why I think that any dip, any pullback that we have, it could be a good opportunity to buy, right? And really, this pullback isn't really that bad because we're still above the moving averages, right? And if we look, we've been really holding steadily above the moving averages, and this is a daily chart. So let's look at the historic chart, right? If you look at historically, let's look at 2017 recently. We had this really nice, 2017 was one of the best years in the stock market because the volatility was low and it was pretty smooth sailing. But even in that year, one of the best years in the history of the stock market, we pulled back and we actually went under the 50-day moving average several times, right? And this year we've only gone down a couple times, right? Really just 2 times. And right now we're probably going to touch this line. But I expect us to hold this pretty strong and move up forward. But let's talk about what happens if we don't. What if we go down below this gold line? This gold line is the 100-day simple moving average on the daily chart. And let's look at 2013 and 2014, right? This is 2013, 2014, right? Look at the market. Usual price action, right? Just the usual price action. Like when the market goes up, it grinds up higher, right? It takes the escalators up and the elevator down, right? When the market comes down, it comes down hard. It comes down fast, like we saw in 2015, like we saw in 2018, and like what we saw in 2020 last year. When the market goes up, it tends to grind higher slowly. It climbs what we call the wall of worry, right? There's always bad news around the corner about why the market is going to crash or whatever. There's always some sort of bad news on why the market might come down. But the market usually over the last 100 years has climbed that wall of worry and continued to grind higher. And yes, once in a while we'll have small corrections of like 5 to 10%, maybe even 10 to 20%, but usually the market can overcome that and continue higher. So let's look at 2013 to 2014. Let's see the price of the S&P, or in this case we're looking at SPY. which is the ETF that tracks the S&P 500, right? Come down below the 100-day moving average, which is the gold line, and bounce up, bounce up, bounce up. In this case, we haven't even like gotten to that point yet over the last few weeks, where we haven't even gone under this. So if we are to like follow historical price action, we can still go down, and we can go down a lot more and still be bullish in the bigger picture. So this is why like I think that any sort of like fear in terms of what the rising interest rates might do to the price of the stock market or any stocks, especially tech stocks, right, who have been hit pretty hard recently. Any pullbacks could be great opportunities to buy, and that's what I'm personally going to do. I'm going to wait for this to perhaps draw down a little bit more and buy as people buy. You just want to buy the fear, right? That's when you want to buy. You don't want to buy when stocks are pushing up higher, because that's when people get greedy, and that's usually when sort of short-term top is in, right? The best time to get the best value is when people are panicking and they think that it's going to keep going down, and what happens? The smart money comes in and basically buys all these bottoms, all these dips, right? So that's just a quick view of where I think the market is headed towards the future. I think we're going to continue to grind higher, and as long as we stay steady, right, finding support on these moving averages, especially the 50 and the 100-day moving averages, as we've seen historically, the market has found support, right? As long as we find support, I expect us to continue grinding higher. And really, the interest rate news, I think, is going to be a great way to keep the market in check, right? Because we don't want the market just to keep going straight up on like just great news every day, right? Because the faster and more intense the market goes up, usually there's a big crash, and that might take a while to recover. So just having some sort of like, I guess, sort of bearish news like, oh, rising interest rates might put pressure on the markets, that's a great way to keep the market in check and make sure that we're not going up too quickly, as we continue, because we want to see the market grind higher, because that will make the bull market last a lot longer, which I think is what we all want. So that's my thoughts on the market. Yeah, so if you found this video useful, I would really appreciate it if you could like this video, leave a comment below, and of course subscribe for updates. Thank you, and I appreciate your support.